Okay, hello everybody. Thanks for waiting. Welcome to today's webinar. Good evening to all. So today's webinar will be hosted by myself, Yong Heng, and my colleague, Mike. So today's webinar is part of a three-part special series. We will actually cover everything in all aspects of the US election for this year. So for this part, we are actually exploring the impact on the finance and the tech sector. So for the second part, which will happen next week, next Friday, we shall cover the other key areas under the US election. Then following on the 13th of November, there will be after the election, there will be a roundup of the election. What are we looking forward to? What's the future? What does the economy hold in the future after the election? Okay, to start today's webinar proper, for today's webinar agenda we will be exploring some of the indicators that actually have predicted the past US election relatively well. We will also be looking at some of the historical data pre and post the election period. Then we will also extrapolate using the current market data on this indicator to see which of the candidate this indicator is forecasting to win this year's election. Then we'll be analyzing and discussing the impact on the stock market and the economy on each of the presidential candidates. Then I will hand over the time to my colleague, which will go into deeper details on the key impact from the election outcome on the financials and the tech sectors. We'll end off today's webinar with a Q&A section. So please feel free to post questions to us using the Q&A section. We will try our best to answer them throughout the webinar. Okay, for a start, I will be introducing two of the indicators that has predicted the US election relatively well. First of the indicator is the economic indicator. The state of the economy is the key indicator that has predicted the US election relatively well. This indicator has predicted 100% of the election outcomes since the 1930s. You can see from the table here, this table actually shows all election outcome and the state of the economy from the current all the way until the 1900s. With the exception of the two election outcomes prior to the 1930s, we can see that all sitting president, if they were to avoid a recession in the 2 years before election, he or she will actually goes on to be re-elected as the president. The reverse is also true. If the sitting president meets with an election in the later part of this presidential term, he will be voted out of the White House. So the relationship between recession and the re-election of the incumbent become crystal clear. If the incumbent wants to be re-elected into the White House, he or she ought to actually avoid a recession. So for next indicator, it will be the stock market indicator. The stock market we are looking at here is the S&P 500. The three-month returns of the S&P 500 is a key indicator of the US election results, in the US election outcome. This indicator have a relatively well track record and has predicted more than 87% of the election outcome since the 1920s. You can see from the chart here, the blue line here represents the incumbent party winning the election, and the yellow line here represents the incumbent party losing the election. Prior to the election in the November period, if the 3 months return is trending upwards, the incumbent party usually wins the election. On the flip side, prior to the election in November, if the market return is negative, the incumbent will lose the re-election. Under this indicator, it also draws the relationship between market volatility during the period of election. We can actually see that market volatility tend to be elevated in the few months before election. You can see from the chart here that the market volatility actually picks up all the way until the election period, which then after that it will die down after. The elevated volatility may be because of the result that the market is constantly repricing in changes, probability of the changes in the future administration and the policies. With the uncertainty of the future administration and policy, it introduced uncertainty into the market, which actually translates to market volatility. We will now look at the current market data and use this data on the indicator to see which of the candidates that this indicator is pointing towards to. We will be looking from the two sides. One will be the economy and the stock market side. So on the economy side, the COVID-19 pandemic, which actually happens as a health crisis, actually overspilled and become an economic crisis. This economic crisis actually caused the US economy to be in a deep recession. The US economy, we can see from this chart here. This chart actually shows the quarterly GDP growth rate of the US economy from the 1950s all the way until the current. You can see that the US economy actually contracted at an astounding rate. The current US recession is made worse by the slow and controversial government response in containing the virus. It is further made worse by the natural disaster and protests that is happening throughout the country. You can see from the chart here that the steep decline in the GDP growth rate actually comes in at more than negative 31%. This negative GDP growth rate is actually the deepest since World War II, relative to the norm of the US economy GDP growth rate, which is at 3%. So we can actually see that the current US recession is actually in a very deep contraction. So on the employment side, at the start of the lockdown, to curb the spread of the virus, we can actually see the unemployment rate actually spike up here. The quarterly unemployment rate registered is at 13%. This as compared to the average norm of around 5%. As the economy begins to recover slowly, the unemployment figure that comes in is still at a high level of 8%. This is actually more than twice the pre-crisis level. So we can actually see that the economy is still pretty much affected by the aftermath of the pandemic. And this recession actually threatens Donald Trump's re-election chances. On the flip side, on the stock market, the picture is very different. At the start of the pandemic, when the panic actually spread throughout the global economy, the US stock market actually crashed from its February peak, the crash of 32% from its February peak all the way to the bottom. It only takes a matter of few weeks for the stock market to crash from its peak to its bottom in the March period. Then on the hope of virus containment and the development of the vaccine, you can see here that the stock market actually rebounded to its record close on 18th of August here. So there's actually a divide between the Wall Street and the Main Street. On the Wall Street side, the economy is still very much affected by the pandemic, and we can see the recovery is actually weakening. But on the stock market side, the stock market actually have already recovered to pre-crisis level, as we can see from this line here. The stock market level currently is staying above the pre-crisis level. So after going through the current market data, we can actually see that the economy indicator is pointing towards a Biden victory, and the current 3 months return is pointing to a Donald Trump's victory. The indicator is actually split between who will win this year's election. So as of now, it's still quite uncertain that who actually holds the lead to the election. But then on the polls here, we actually see that in the starting of October, we can see that actually Biden was holding on to the lead and was actually holding to the widest lead. But then recently Donald Trump actually trades up and closed up the lead. The current lead as of yesterday, Biden actually lead Donald Trump at around 8 percentage points. But we do have to acknowledge that Donald Trump might have a lower chance of being re-elected because of the numerous controversial issues that he faced recently, such as his tax return, his controversial stance on the stimulus aid, and him being tested positively for the virus. So what does this mean to the market post-election? We can see from the chart here that the purple line here represents the incumbent party winning the election, and the orange line here represents the incumbent party losing the election. You can see that a few months after the election in the November period, if the incumbent party was to win the election, the stock market returns actually trends upwards. This as compared to when the incumbent party loses the election, when the new administration is voted into the White House, the market return is actually very muted. You can see the difference in the return here on the chart on the right. When the incumbent party were to remain in power in the White House, the market return is much higher than when the incumbent party loses control of the White House. This may be because of the fact that if the new administration were to be voted into the White House, it actually brings along a whole set of new uncertainty because of the fact of the changing administration, because of the fact of the changing agenda and the policies that they might actually administer. This whole new set of uncertainty actually breeds market volatility, and which also may translate to the underperformance in the market. We will then look at some of the agendas and the approach under each of the party and the candidates. So for a start, under the agenda, Donald Trump and the Republican actually thought to represent deregulation and a more pro-business environment. Their advocacy for tax cut is actually positively impacting the economy and the stock market. On the flip side, Joe Biden and the Democrats may actually represent more pro-regulation and may be anti-growth in nature. Their advocacy for tax hike is actually may actually have a negative impact on the stock market and the economy. But then we do question the feasibility and the probability of them actually increasing tax if they were to be elected. This is because if Joe Biden were to be elected as the president, he will be inheriting a US economy that is still high on unemployment rate. So his main goal would actually be bringing down these unemployment figures rather than actually rolling back the tax cut that was administered by the Trump administration. Because if he were to increase tax, this actually puts a limit on the corporates to actually expand hiring, which would actually put in direct contrast with his goal of actually bringing down the unemployment figures. Then on the fiscal side, Donald Trump and the Republican is thought to actually represent a smaller fiscal package as compared to Joe Biden and the Democrats. This is important, especially in the current environment, because a bigger fiscal package actually translates to a higher GDP growth rate. This is important in the current environment because we can see that the economic recovery is actually weakening. Even though there is unprecedented support from the Fed side due to their easy monetary policy, there needs to be a fiscal package to actually work hand in hand to strengthen the economic recovery from the pandemic and the recession. Then on the trade side, we have all experienced Donald Trump's extreme approach and unpredictability in handling trade matters. His use of tariffs as a negotiation tool actually escalate into trade wars with his trading partners, which you can see the trade war between US and China. And if he were to be re-elected as the president, he will be empowered on trade-related matters. Then he will actually follow through on all the threats. We can actually see an increased second wave of tension with their trading partner, especially China. This may actually translate into a second round of trade wars. He may also actually shift his target to the European countries, which he actually deems them to be a bigger enemy than China. On the reverse side, Joe Biden is thought to actually handle the trade matters with a more moderate and more predictable approach. He's thought to actually use conventional and traditional diplomacy when dealing with trade matters. This may actually eliminate the uncertainty as compared to Donald Trump's unpredictability in handling trade matters. This will actually help to improve trade relationship with his trading partners, especially when they are actually soured by Donald Trump. So under each party and candidates, we can actually see the benefit and cost of each of their agendas and approach. So there's a need for benefit and cost analysis between the two. The other thing to note is the mix of the Congress is important here as well, because under each of the candidate, they all have their own proposed policy, but for the proposed policy to be enacted is still subject to approval and passed by the Congress. So this actually limits the type of policies and the effectiveness of policies to be implemented into the economy. So for an effective policy, there needs the focal point of the Congress and the president have to be in sync. Okay, so now I will actually pass the time on to Mike. We will go into greater detail and explain on the impact from the election on the financial sector and the tech sector. Mike, please.
Okay, thank you. Thank you, Heng. So I'll carry on the second portion of the webinar. Give me a moment. Okay, so what I will be actually covering today will be actually more about corporate tax. Actually, corporate tax will be one of the main issues that will actually affect the overall. Next, I'll cover on the finance sector, and lastly, the technology sector. So all of us know that actually corporate tax, regardless is it corporate, all the companies, right, have to actually pay for corporate tax, and corporate tax will actually affect the business cost of the company. Because let's say you earn maybe $1 million, and now the corporate tax of US is actually 0.21%, so you have to pay on that. So in case of any increase of corporate tax, right, this will definitely affect the profitability of the company. And for corporate tax, right, it's actually one of the third largest source of federal tax revenue in US. So usually what they collect this revenue, right, they'll actually be redirect into building of infrastructure and support other public services. So let us take a look at the corporate tax over the years. So you can see actually previously corporate tax were very high, and in between 1990s and to 2017, right, actually corporate tax was around 35%. However, in 2017, actually Trump through the job tax cut and job act, right, they actually cut the tax from corporate tax from 35% to 21%. So actually there's another things that they actually amend during 2017 is actually the corporate alternate minimum tax. So in corporate wise, they are actually required to cover two tax liability under two sets of rules. One is a regular tax liability and one is a tentative alternate minimum tax. So actually why they have previously have this rule is actually to prevent company to escape from a tax liability using certain corporate tax preference. Like for example, some company wise, right, they have been paying almost close to zero or very low tax after this remove of this corporate alternative minimum tax in 2017, because they can make use of the R&D or this, and they say that they put the funds into R&D research, and actually from there they actually can reduce their corporate tax from even lower than the 21%. And there's a research that found out that quite a lot S&P 500 company, right, they may be even paying less than, a lot of them are actually paying much lesser than the 21% corporate tax in reality. And also there's also other issue that can affect the corporate tax is actually work opportunity credit and also welfare to work credit. So they can make use, corporate can actually make use of all these so-called loophole to actually escape paying the corporate tax to the government. So what do you think? Maybe all of you want to make a guess, what will company do with the spare cash? Maybe you can type in the chat. After I give you 30 seconds to try and make a guess, what do you think the company will do with all this spare cash? Okay, I think quite a lot of people actually know. Okay, so in reality, right, because actually by right corporate, we want to actually cut down on corporate tax. It's actually for company to do business expansion. So in business expansion, include like increase of your capital stock, means your machinery, your so-called all your assets, then increase of productivity, increase of the wages, and increase of employment rate for the whole of US. But in reality, does company will always invest all this spare cash back in US, or they actually invest in overseas? This is one question we have to later we'll discuss. Next thing, actually the company wise, most of you actually get the correct answer, use this spare cash to pay out dividend. Another thing is actually do share buyback. So actually all these are in general actually positive for the share price, because for us as an investor, right, we all love dividend. And also when share buyback, right, actually cut down the amount of share in the market, and this one actually increase the earnings per share for the shares. And this one, you through the PE ratio, right, you understand that actually this will actually generally increase the share price. So that's why actually share price has been also going up. So the next question we need to ask is this actually tax cut and the Job Act in 2017 really efficient in the creating more job and employment rate? So this is actually the US employment rate from around 2008 to 2020. So in reality, right, actually later we have some reports say that actually it's actually a normal growth, that it doesn't really help that much in creating extra employment rate. So there's actually an impact on the budget and American family done by the Tax Policy Center. So in reality, right, from this William, so he did a so-called a study on all this, right? Actually, this point is that on all these tax cut, all this has actually minimum effect on the long-term growth. It may stimulate the economy over the first few years, but in long-term wise, other factors also play an important role in the recent economic performance. However, this actually corporate tax actually benefit to the high income holders, and for the most income holders, right, the lower and the mid, right, actually end off worse in this tax cut. And it's also create a long-term issue, because you know that actually all this corporate tax and also the household tax is actually a source of revenue for the federal government. So this will actually make a federal fiscal situation even much worse off. So with the actually these studies means that actually in short, right, it actually distribute all these resources to the current high income household at the expenses of current low income household and future generation. So it may be good in short term wise, but for the future generation, also the lower income, actually they actually will be worse off. But for shareholder wise, it's better because you can see what is the impact. So another study actually done by IMF, actually they did the increment cash since the TCJA. So actually they said that only 20% of this increment cash outflow actually go to the capital expenditure and the R&D. So the rest of them actually go back to share buyback, dividend, and other activities. So that's why you can see that actually share price has been actually going up significantly if you exclude the COVID-2019. So you can see actually you see that there's increasing activity of share buyback, and company also continue to increase their dividend. So you can see S&P is around 2017, it actually has been going up very significant if you exclude this so-called COVID-19. So now we'll talk about, going back to the topic, we'll talk about corporate tax. So current situation, corporate tax is actually reduced into 21% in 2017. For Trump-wise, right, they intend to keep corporate tax around 21%. So in general, businesses why will favor this, because they have cash on hand, they can do business expansion, but in reality they may not do a business expansion, but most likely will be using for dividend payout and stock buyback, which is more positive for the share price. However, for Biden, actually he intend to increase the corporate tax from 21 to 28%. So, and what another direction that he want to use is actually when he collect this extra tax revenue, he want to actually upgrade the infrastructure and shift towards a clean energy future. So in general, for all businesses, with increasing of corporate tax and also installation likely to get back the just now we talk about the alternative minimum tax, right? This one will be less favorable for businesses because you have less cash, because they have to pay this additional sum of 7% back to the federal government. So they'll be doing less business expansion, less dividend payout, less stock buyback. So in general, that's less positive for the overall share price. However, we believe that actually because they want to use this to grow towards a clean energy and infrastructure, so businesses operating in infrastructure and clean energy are likely to be benefiting from this. And then personally, if you ask me, right, we see that actually the harm of the global warming effects and also all this, right, actually for this, I would say that clean energy is actually something that we need to look into the future. So next, I'll move on to finance sector. So finance sector is actually one of the key pillars of the economy, because no matter what business you do, right, you need to handle loans, you need to pay out with salary, all this. Actually, all this will come from finance sectors. So it's actually it provide financial service to both commercial and all retail clients. Even your house loan, everything, right? You can see that it's very important. Even your insurance, all this, they involve finance sector. So a stable economy require a very healthy finance sector, as this sector provide loans, they grow, grant mortgages to home, and also issue insurance policy to protect company, and also much more other things. And also finance sector is very important for us. Actually, we are doing investment. You have to build up saving for our retirement. Also provide a lot of employment to the millions of people working in the finance industry. So actually we did so-called this is actually an article. So-called they did a study that for finance sector actually contribute around 21% to the US GDP in around in 2019. So you can see actually this industry is very important growth driver of US economy. So what is the current situation of finance sector? So under Trump, right, actually during Obama, right, because you can see that actually during that period in the 2008 so-called economic crisis, there's a lot of mortgages, loans, and end up there's actually default all this. So actually they have implement a lot stringent control on the banks. So under Trump, is actually the regulator roll back actually a major they call it the Obama era bank reform. So when they roll back this, it's actually easier for banks. There'll be less regulation for the banks. So it's easier for banks to invest in venture capital, to about restriction into investing hedge fund, private equity, all this. So what is actually Trump in? So in Trump, right, actually does not really want to change so much. He will actually do preserve the current status code. So for us, what we anticipate is actually a more of Wall Street friendly regulation, means that the current bank, right, should be able to continue benefit from the major change bank reform previously. However, for Joe Biden, right, he's actually quite he want actually strict control on all this. So we actually expect a very strong financial regulation, and if possible, right, maybe he will actually look into because previously he's actually a VP. So what he will do is maybe he'll look into what happened during Obama, and he may implement some of this bank policy back on the regulation. So currently, he actually proposed strengthening of oversight of this consumer lending, especially through all this credit card, and also regulating all this interest rate. So what you want to do is actually you want to make use of this consumer financial protective bureau to crack down on all this abusive and deceptive lending and make borrowing costs more transparent. In short, what will happen to the finance industry with all these measure and also other measure that may come out, right, means that there will be more regulation. When you have more regulation, you might need to actually hire more people, and also there will be higher operating costs. So with higher operating costs, this will affect profitability, and in this case, they actually weigh down negative on the bank profitability. Another thing is that because just now we talked about corporate tax or this, with slowdown of business expansion, dividend payout, and stock buyback, right? This one will actually slow down all this financial activity, because you see when company want to do any dividend payout or stock buyback, they'll have to go through the finance industry. So with all this activity being slowed down, definitely they also weigh on the profitability, because bank will be making less revenue and profit. This one will actually affect. However, we see that because for Joe Biden is actually going towards clean and energy and infrastructure, so we may see that higher demand for all these sectors. Okay, next I will go into the technology sector. So you can see that technology sector is another important growth driver of US, and technology has actually become parts of our life through machine and software. You can see that everyone actually interact with technology, regardless you know or not, because you are using a phone, iPhone or Samsung, all this will have technology. Google, then you can see that you play games, all this will require technology sectors also. So in this year, because of COVID-19, everyone actually because of this social distancing measure and also work from home measure, right? You can see actually defensive technology used to be actually in the previous recession, right? Technology doesn't seem to be actually a so-called defensive sector, unlike this year. So this recession is really quite unique from the previous recession. So it's because of all this technology being used heavily. And also partly because of the technology trend, you can see that actually they are moving very fast. We talk about fintech, you talk about blockchain, you talk about automation, you talk about IoT, all this all involve technology. So you can see that during this stage, right, there are a lot of companies who actually work on all this cloud play also. So you can see that the huge fund inflow in the technology sectors. So it's that's why they have had quite significant growth. Another thing is that when we talk about technology sector, I think cybersecurity is something that has been a bit lagging behind because everyone work from home. So you can see actually cybersecurity, right? There's recent article worry about cybersecurity may not be actually in terms of office, maybe yes, your working company may be working well in terms of cybersecurity, but in terms of working from home, there may be a lot issue upcoming from this. So cybersecurity is something that you can keep a lookout going forward also. So for Trump and Joe Biden, right, they are both actually have intention to actually regulate or so-called strengthening control on all this technology sector. So we just talk about Section 2030. So what is this about? So actually Trump did a tweet that he want to repeal this Section 230. So it's actually a so-called it's helped to actually protect the US so-called tech company, provide them immunity from liability from provider and user of interactive computer service, which publish information provided by the third party user. So let's say you talk about, like for example, I may be publishing put a misinformation or misleading article on the Facebook, but in reality I may not be reliable and the technology may not be reliable. The so-called this Facebook is not reliable. So this actually protects the tech company. But for Trump and Biden, right, they actually have intention to remove this sector to 230, or they want to actually rework on this because of this. So another thing is we are worried, especially with the data privacy. So we can see that over the past few years, there's actually has been a lot data privacy issue, data leak, all this, and people actually worry about this. So for both of them, they also have intention of stronger data privacy protection, but they are actually they do have a bit of slight difference in terms of how they want to regulate this data privacy. So we actually believe that with all these so-called measures and stronger regulation of the finance tech sectors, right, means that you have to regulate more, you have to be more careful. So this one will actually come with higher operating costs, and this one will actually affect the profitability of the whole technology sector, especially those online social media. Next thing is for the technology, another important part of technology is actually the infrastructure. For Trump wise, his infrastructure plan is actually focused on more on 5G. So you can see why actually Trump start to target Huawei, because Huawei actually has been very strong leader in actually 5G technology. You can see actually before he really target, right, he has been one of the leading 5G in terms of Europe, US, and actually Canada. So, but in this case, that's why he target Huawei, because he's really worried about China control of this 5G technology. But for Joe Biden, it's actually his emphasis is more towards green economy related infrastructure. He want also technology infrastructure, but he come from a different point of view. He want actually all these energies technology sector to be actually more green energy, like using of solar energy, all this, and also upgrading of the current infrastructure. So in this, right, actually one of the benefit of this so-called infrastructure, I believe that telco will be likely to benefit from both infrastructure, from 5G, also regardless of which sector, right? Because we believe that technologies trend will continue to grow forward, because especially there's a lot of factories going towards more smart manufacturing with all this IoT, all this, right? Actually believe that chip suppliers are likely to benefit from 5G. And even in Singapore, you can see that actually our minister actually recently talked about all this so-called semiconductor industry. So you can see that it's important that semiconductor will continue to grow also. So here are some of the ETF that we can look out or stock that we can look out for if Trump win or Joe Biden. So let's say if you are talking about just fine for the first portion, later maybe I'll show you directly in the website itself. I'll show you the website now. So actually we have Phillip Security, right? We have actually come up with a landing page for all these landing page for all these US president election 2022 countdown. So you can see the countdown days to the election. Then in each report, right, there's a lot of reports and what are the sector or counter that you can keep a lookout for. So let's say we just click on research report. So there's what they are lookout for finance industry is Trump win, because finance industry just now talk about they're going to keep status quo, means that they're not going to change so much in terms of the finance industry. And also the corporate tax or this will actually benefit the finance industry. However, for Joe Biden, right, actually is going more towards the clean energy, right? You can see he's going, all the ETF is actually all the low carbon, all the infrastructure will be actually going towards the what you will look out for if actually Joe Biden wins. So depend on who do you think will become the next US president, you can actually start to actually position your overall portfolio towards all this. So you can, if you want to read out all this article, I just have to click on this. Yeah, so actually this is the US economic election scenario analysis. So all these are actually written by some of our dealer and also the research team. So we did try to did study and share all this information and also upcoming. So you can see each different sectors. I can read all these articles. So I won't really go through one by one because there's quite a lot of information to read up all this. Then next, you can just continue to read and find out the article counter that you're looking for. And also we have a lot upcoming webinars for all these US elections. So in case you are interested to sign up to understand more about each individual sector or different ways of analysis, so you can sign up for all these webinars. And subsequently, after the election end, we actually have our Jin Rong from research team and also Peggy from the head of Chief of Investment Officer. You're actually sharing more about what is the after impact on the global market itself. So I've come towards the end of the webinar. Maybe we'll start to look out for the Q&A portion. Here's the disclaimer. In case you need to contact me, you can drop me. So maybe we'll go to a Q&A portion first. Okay, why do you not consider China development and relationship on the impact of US economy? Actually, it do impact, but in this webinar, because for us, we are only focusing on the finance and the tech sector. That's why we actually don't cover. I think, let me see. In the next one, let me see. For the, you're talking about China, right? Actually, will be under this healthcare and foreign policy, because China actually form more towards the foreign policy. So that's why you can keep a lookout for upcoming webinar where we'll talk about all about this actually foreign policy. And also, I'm not, let me see whether all this article, right, you can actually foreign policy. I think it will be coming up soon, so you can keep a lookout over here. Let me see what is the next question. Okay, what are some of the good US cybersecurity stock pick? For me, actually, I'm more familiar with Cisco, because Cisco, right, they provide physical and soft hardware, what we call hardware and software in terms of this cybersecurity. If we are not able to actually do stock pick, right, there's actually a ETF called Hex ETF. So actually this Hex ETF, right, actually has been performing well. Let me go into the info. So this is actually one of the first ETF that focus just on cybersecurity. They actually what they track is actually company who create cybersecurity hardware and software, and also those who provide cybersecurity as a services. So you can see this ETF expand ratio is around 0.6%. So let us take a look at the so-called performance, maybe look at the maximum. So you can see actually cybersecurity has been actually a growing trend, especially with all these technology sectors, right? So you can see the importance of cybersecurity. So actually, although it dropped very sharply, but actually because it's actually quite defensive. So you can see the returns over the years. So you can see some of the top holdings. Cisco is one of them, Cloudflare, and there are quite a lot of other cybersecurity companies under this. So actually another thing is that you are interested in top 10 technology trend, actually you can go and garner. Always read up this top 10 strategy technology trend. It's actually quite interesting. Yeah, let me get. So this is something that we always need to understand how actually this technology sector will perform. Although I believe that with both US president candidate, right, they are likely to actually impose a higher regulation on this technology, but I believe that this technology trend will actually continue to actually go forward. So maybe I can share this article, you can understand about all this going forward. So all this we talk about actually hyper automation means that a lot higher advanced automation with including AI and machine learning and multi-experience. So democracy, and also we talk about human, you talk about AI, VR, all this. Then we also want more transparency and traceability. So this one is also part of the blockchain also. Then how we actually use cloud computing. Then also this one actually has been pretty much in play, like autonomous thing. Then also practical blockchain also. So you can see all this is very important technology that we are going to look out for. And cybersecurity AI, they don't just look for normal cybersecurity. One AI to incorporate AI into cybersecurity means that the AI will be actually continue to learn about this cybersecurity threat, and they'll continue to upgrade themselves by their own. Instead of engineer continue to do coding and try to upgrade, AI will become a part of that, and they do continuous 24-hour upgrading. So you can see the AI will become very important in our future technology trend. So someone asked how will actually Joe Biden will affect Citigroup, Apple, and Alphabet. So first one is, in general, right, corporate tax already affect the profitability. And another thing is, just now I say that Joe Biden will be actually tightening regulation on finance and technology. So in general, short term wise, you can see that it might have short term impact on the overall of all these stock. But in long term, right, actually you can see that all this you actually start to direct all this towards the infrastructures. So maybe in long term wise, it's actually more sustainable growth. That's what I believe. Because short term wise, if you cut corporate tax, all this end up is go into share buyback. You go into actually dividend, but it actually doesn't. Company don't really actually grow, use this for growth. This is just my personal take. Well, I think some of you actually asked about 5G pay. So I think 5G pay actually, one of them is actually Nokia. Nokia is very, although last time Nokia is actually one of the advanced handphone, but after that it actually start to roll out to Apple, Samsung, all this. So I believe that actually 5G, in terms of 5G pay, right, one of them you can look out for is actually Nokia. Okay, let me see what other question are. Well, there's quite a lot of questions. Let me see what the other important question. So actually, someone asked what is the worry about so-called technology sector? Will they start to rotate from when we see that this vaccine being developed, right? Will they start to actually rotate from technology to other sector? So I think that this is possible because first of all, there's a lot incoming funds flow into the technology sector and it's actually run up a lot already. However, if most of us actually start to believe that all these vaccine will start to actually help us, right? Actually, people will start to reduce their position and go into a so-called other sectors already. So actually, I think there's another. I can't remember. There's one article that actually I shared. Actually, this website also did a lot study with the investment. Actually, they did a sector rotation study. So I let me see whether I can find out this article later on. They actually study about what will happen with actually all these vaccines start to develop. They actually believe that some of these sector, like maybe the bank and also the property, all this may actually start to recover. So you need to actually understand what is the economic cycle. So actually, when you talk about economy, you need to understand what is early stage, mid, and late stage. And now we are actually inside the recession state. And by right, actually, info technology, right, by right in the previous sector is negative. But in this, because of this COVID-19, it actually has been outperforming. So if you are looking at it, if you are looking towards the early stage, right, because when you go from recession back to the early stage, right, these are the sector that we'll keep a lookout for. I think for this technology sector wise, it may not be the same because we always think that all recession are not the same, so it can differ also. So maybe all these finance, real estate, consumer discretionary will start to actually recover, and materials also. So there's actually technology rotation also. Maybe I can share this article inside the chat. Give me a moment, let me open the chat. Okay, someone actually asked whether Sonic Ericsson, I think it's Ericsson is a good pay. Okay, personally, I do not have any clue about this because I would need to look up what is the company going to do investment and what they are focusing on and how is their key company financial. So I can't really answer this as a good 5G pay. Okay, let me see.
So there's actually a question of will US pass the stimulus bill before election? So actually this in my view is highly unlikely because we are less than 2 weeks to election, and if either party were to be elected, their motivation to actually pass their stimulus bill is higher than actually if they were to negotiate for come to a compromise now to come to a compromise stimulus bill right now. So I don't think this yes, for them to pass the stimulus bill now is quite unlikely.
Okay, then maybe I answer the next question. What are the US market impact to Singapore stock in what relation will the relation with respect to the bank sector? So I'll say that US I would say that actually anything impact China or Hong Kong more will impact Singapore more than US, because we actually, if you look at our so-called global economic trade, right, actually Hong Kong and China actually occupy I think around 30% of our so-called trade flow, all this. So you can see actually anything that affect China more affects Singapore more. So you can see actually how our stock market perform right is actually following some of this China, Hong Kong market more than actually US already. You can see US has been climbing over the past few years, but Singapore wise is actually quite, I would say that quite boring for most people. There's been actually, there's no interesting stock. And also one thing is that Singapore, so-called, if you just talk about STI is actually mainly make up of our old economy stock, where we talk about property, we talk about bank. We don't have any so-called fintech technology, so company listed on the STI. So you can see actually for this, right, it's quite boring. And in terms of banking sector wise, right, next thing we need to others than the regulation, right, need to understand the overall interest rate environment currently and also the economy. So you can see currently this economy actually the COVID-19 have actually weighed down on heavily on our economy, and also a lot of businesses, right, you can see actually they close overnight during just these few months. Quite a lot F&B and also other companies actually just closed down during this period. So definitely this one will actually somehow affect the bank loans also. Then the next thing is that bank make money on your taking your money and lending out. So with the interest rate coming down, this one will affect your net interest margin. So short term wise, I don't think the bank sector will really go up that high because of this lower interest net margin. However, because of low interest rate, they may have seen higher loan growth, because you can see actually there's a so-called growing trend that people are buying more properties. I think it's mainly for the rich people. They are actually making use of this low interest rate environment and start to grow. So that may be a bit uh, smoothened by this increase of bank loan from the property sector. So in short, I don't think in short term, I think the bank sector won't unlikely to grow so much. And also we need to take note there'll be digital bank license coming, and this one may have further competition in Singapore. Okay, I think someone talked about possible impact of the election and the candidate on EV car. So I think for Trump wise, it may not be so much on clean energy or this, but for Joe Biden, because you want a clean energy and infrastructure, right? So you can see actually over the past few weeks or few months, right, you can see actually there's quite a lot of funds start to go into all this clean energy and sectors. All this, you can see the ETF, all this start to run up. So in EV car will be one of the potential that can benefit. So you can see actually Tesla, NIO, all these shares, right, actually has been actually going up over the past few weeks to few months. Someone actually asked for about Joe Biden winning election, what is the likely impact of China 5G stock? This one I will say that because for him, he is actually not really focusing on 5G. I'm not sure whether he will actually lessen, because people actually, most of us actually expect that he will be also continue to be harsh on China itself. Also, another thing is that US are, as you see from the past, how US actually treated Russia, treated Japan, all these upcoming number two, right? I would say that US is unlikely to actually lessen his stand on this China, where it's likely to overtake US. So I would think that he might continue to be harsh on China itself, although may not be so erratic like the Trump, where he always sing, yes, it's good, it's not good. Yeah. So I'll say that with under Joe Biden, maybe he might lessen a bit, but I'll say that he's still likely to see a harsh stand against US against China. Okay, someone asked actually whether we should dispose all our equity and unit trust before election. So next thing is I'll ask, are you 100% invest or not? And what is your long term? Actually, for me is I will always continue to build, because for my long term aim is actually I want to build up I have too good for portfolio. For my growth portfolio, right, maybe I'll keep a bit. Then for my dividend passive, right, I'll continue to build up, because in the end, right, in the long run, by the 50 plus, I want to build up a portfolio that can generate sufficient income for me, so I don't have to actually continue working all the way. So depend what is your goal. Are you short-term trader or long-term investor, and how you actually want to invest? And so it's also always good to actually diversify in terms of different sector and different country. Okay, what is the effect of bond? You can see actually past few months, all this, I would say that those better above junk grade bonds, right? You can see actually the price has been actually at one point, right? You can see the sharp drop in the bond price, but currently you can see actually because of the low interest rate environment, there's very little attractive investment out there. So what will people do? People will actually look out for all these safer assets class. So bond is one of them. So actually you can see quite a lot of people actually investing into bonds. So in your portfolio, it's also good to invest in bonds because of the stock market is actually volatile. So you may want to actually invest some in bonds to actually lessen the impact in case stock market swing up and down. And also bonds tend to actually be more stable income also. So because for dividend wise, company may cut dividend, but bond they actually have set out how much actually the percentage yield they are going to pay out.
Okay, so there's this question on US market that is near high, pandemic ongoing, and poor job market. Is the stock market overpriced? Well, I do agree that the stock market is overpriced currently. It's because of the fact that it's pricing in the development of the vaccine and the containment of the virus. So do we expect a correction to come? There's certainly risk of the correction coming is because of the fact that stock market have already priced in all these good news. So once if there's a bad news that there might not be a vaccine that is coming so quickly or worse than expected job market, we will then actually see a correction in the market.
Okay, maybe I answer. I found one interesting question. Is Bitcoin a good diversification? I think most people actually will be actually avoiding this question, but I found it okay. Personally, you asked me, right? Actually, I did some investment in cryptocurrency. But in cryptocurrency, right, you need to really understand it's actually tend to be much more risky because there's so-called no research analyst. You have to actually understand what the company is doing, and there's a lot of scam out there. So you really need to understand. So actually, what we call Bitcoin, some people actually call it digital gold. So depend on what is your view on that. But in general, I don't encourage people really put that much in terms of all this cryptocurrency because of the high risk involved. You need to really understand what the company or what is this crypto about, because each crypto or this blockchain is actually different. It's very different. You really need to understand. If not, you can actually end up in a scam. So for me, I think that you can consider a very small percentage, maybe 1 to 2%, because actually Bitcoin is also what you look at the correlation and also the printing of the Fed printing of money, right? You can see actually Bitcoin has been going up steadily. And another thing is interesting trend. You can see recently, I think PayPal yesterday just announced that they are going to the crypto payment also. And also you can see that there's also a growing trend of US corporate, right? They actually put some of their treasury fund into Bitcoin. Yeah, so this is something that you can consider when investing, but not a huge percentage in that. I think another question to ask is it a good line to buy airline and cruise shares? I'll say that personally, you are looking at airlines where you see that although the COVID cases right actually has been still continuing to go up, although airline may open up, but long term wise, I don't really encourage airlines because first thing is that airlines right when you want to buy all these airplane, they require a huge upfront capital flow. Like buy a airplane right can be a billions of dollars, and to actually cover this cost right, they actually may take around 10-20 years, and you know the airline industry is very competitive. We are very sensitive. If you look at us, every one of us is very sensitive to airline price. We want to go Japan, right? You look at SIA, what's the price? We look at Japanese airline, what is the price? So we are very sensitive, right? And also airline industry is actually very sensitive to oil price. So their profitability also affected by oil price. And you can see SIA, they perform so-called oil hedging, right? Wow, it's terrible. Yeah, so you know the airline is actually not doing so well. In case you want to do into airline, maybe you will, if you are thinking that economy will start to recover, maybe you will go into services that actually support airline. Like because regardless airline, when airlines start to fly, right, actually there will be require a lot engineering services and ground services. Those are actually, they don't need actually huge debt, unlike the airlines. So personally, I will say that I will stay for, I always say that I'll take SIA plane, but I'll avoid SIA stock. That's my take. Someone actually asked about recently about nano film technology. Okay, personally, I saw that there's quite a lot of hype about this, and also everyone is talking about this. But I don't really, I will need to actually read up more about the specter and understand actually what is this company doing fully and how is the financial about it. Because I would say that in IPO, I would say that don't put too much into IPO because IPO tend to be more risky. You may not know whether actually they mark up their result before they even go IPO and what is the future. Because to create an IPO hype, usually company will do a lot, create a lot of hype, media hype, and also brush up their finance statement before that. So that's something that you have to take note. So currently, I do not have any take on this nano firm. Maybe when I actually study more about this, I'll share inside the Telegram group also.
Okay, so there's a question on financial sector that is expected to remain down. So the person actually asked, is it better to liquidate all the bank stock now and buy back later? So personally, I feel that you don't have to liquidate all your bank stock. So investment is about long-term wise, right? So just keep the short-term noise and look for those banks with with a strong balance sheet and don't have to liquidate most of them. Anyway, banks are actually quite a good dividend play.
Okay, I saw another question about Alibaba. So actually, you need to understand Alibaba have a few business growth. One is actually in terms of e-commerce. Everyone know about e-commerce. So actually, recently I think they launched a few new initiatives. So one of the new initiatives, how they are actually going to help, right? Actually, they are going to help some of these Western country uh, companies, retail companies to go into e-commerce through the Alibaba. And also they actually do into smart manufacturing. They want to actually help company to do some of their automation in terms of smart manufacturing. And also one of the most important, I would say two important is actually talking about cloud pay. Because of the technology trend, everyone work from home and also all this data stored online, right? So actually the demand of cloud services will expect to grow. So Alibaba is actually one of the few main key players than other than Baidu, all this, right? He's actually one of the dominating cloud player in China. So I believe that Alibaba will benefit from this. And lastly, Ant Financial. So actually, for Ant Financial, right, it's actually more of a fintech. So actually, if you actually been to China, you use their app, right? You may have limited service, but their app is actually quite useful. And I use my friend's China app before because they're China locals. But actually, their apps, right, they can actually do a lot wealth management, insurance planning. So it's actually a very strong ecosystem by itself. So with the upcoming and finance listing, right, I think Alibaba for long term wise is a long term growth lah. So I think M Financial will be going to IPO in maybe around 2 to 3 weeks time. So it's something that you can keep a lookout for. I think for, let me find actually there's a Hong Kong pre-IPO. So actually you can take a look at this. So you can Google for Global Phillip, then actually there's offer a Hong Kong pre-IPO. So it's something that you can keep a lookout for and look out for the latest pre-IPOs. So you click on this, you can see what is the upcoming IPO date. Currently it's not inside yet, but you can see actually all this will be informed over here. So you can continue to keep a lookout over here. So I'll share this link, Hong Kong pre-IPO, you can read up more. Then Hong Kong pre-IPO dates, all this I share over here. Okay, maybe we try to, because there's quite a lot of questions, we try to select a few more questions. Maybe I choose 2 more questions and Yong Heng choose 2 more questions. So I start off with this. So what is the outlook of Singapore REITs? So actually, personally, those who know me, right, actually I love Singapore REITs a lot. So actually for me, why I love REITs is actually mainly because of the passive income. Because for us, it's quite hard to do trading because we are a licensed dealer. So for me, I go for more for passive income. I do trading once in a while, but more is actually going passive income. So actually for REITs wise, I think Singapore REITs currently you can see actually they are affected by the COVID-19. So actually they have actually cut down on some of their dividend. But for long term wise, I think REITs is actually, I expect them continue to grow, especially with the increase of gearing ratio and the low interest rate environment. So you can see that actually a lot of REITs, right, currently they are doing very actively expanding, so-called acquiring more property, and this will actually help them in the long-term growth also, especially with the low cost of debt currently.
Okay, so one question on the recent spike of ESG stocks. I think this, in my opinion, might be because earlier in October, Biden is actually holding on to a huge lead on the election outcome. So an ESG stock is actually a good play if Biden were to win the election because of his focus on being more environmental friendly. So this may actually result in the price spike of all these ESG stocks. But anyway, in the long term wise, ESG stocks is actually set to increase even further. With BlackRock, right, at its helm, it's actually shifting or creating more ETF that is actually based on ESG. So we can actually see this like trend towards ESG investing in the long term.
Okay, let me submit my last question now. Wow, there's quite a lot of questions. Okay, maybe I'll talk about some of these 3067, I think it's an iShare. It's actually Hang Seng Tech. So actually there's quite a number of Hang Seng technology, and the iShare one is actually in terms of the expense ratio is one of the lowest. Also, some people actually ask why the price for this ETF is quite volatile, because technology trend, right? Technology stock is actually growth stock. Growth stocks tend to be more volatile also. They actually react to the news as compared to the old economy stock, right? So you can see actually tech, right? They have been actually growing very well also. So they also tend to be so-called volatile because of the expected growth. So in case that actually the expected growth is suddenly slow down, right, then the share price can actually suddenly drop significantly. So that's why the new economy is make up of all these technology tend to be very volatile. Okay, maybe Yong Sing,
Okay.
you can select the last question.
So this is my last question. So just now there was a question on Trump's win is good for US stock but bad for Asia equities, especially China. So this is actually it's very divided, because if Trump were to win the election, right, China would actually be in the next target board, continue to be on the target board for his trades practice. But then on the whole, on Asia equity side, right, it might not be bad for the whole Asia equity per se, because there are actually trade relations that are improving throughout Asia between US and the Asia countries such as India, as you can see, and Japan. So a Trump victory may be bad for China, but then it might not be bad as a whole for the Asia Pacific.
Okay, thank you. I think thanks for everyone for joining, because it may not be there's quite a lot of questions you may not be able to answer all. So in case you all still have any question, right, feel free to join the Telegram group so we can actually continue to assist you. And also you can keep a lookout for upcoming webinars. So let me share the upcoming webinars. Where is it? Yeah, so our upcoming webinar is all shown over here. So you can sign up and understand more about all this. Thank you.